Hello, I'm Brad Miller with the Ohio House of Representatives. Today I'm talking briefly with State Representative Mike Henne of the 40th House District, which includes portions of Montgomery County. Representative Henne recently introduced House Bill 5, which seeks to bring uniformity to Ohio's municipal income tax system. Representative, thanks for joining us today.
Thank you.
Can you begin and just briefly explain first what the municipal income tax is, and secondly, why it needs to be reformed?
Yes, municipal income taxes, one of the ways cities generate revenue. Just like the state of Ohio, they tax state revenue and federal government taxes your revenue. This allows the city to do that. In 1946, a law was enacted that authorized cities to impose their own municipal income tax. Now there's, at that point, about 600 cities went 600 different directions with the bill, creating one of the most confusing tax systems in the country. It's quite a burden on most of the business community. In many cases, compliance is more than the tax itself. You can imagine a contractor or some business working in multiple jurisdictions and having to comply with 600 different, laws to comply with the income tax. Site selectors around the country have told us that this is one of the major burdens to moving a business to the state of Ohio is our municipal income tax system.
So I mentioned at the beginning you recently introduced House Bill 5. What is the goal of this legislation?
Well, our goal is to simplify the compliance problem. If everybody's playing under the same rules, it will be a lot simpler for businesses to comply. It will reduce the business overhead, and it will allow, I think it will create more compliance across the state.
So how did you come to this solution? What has the process been like? Who have you worked with, talked to, so forth?
It's been a good process. We started this about 2 years ago, and we've met with city finance directors, city managers, some city mayors, the different business organizations, the city's organization, the municipal league. We've sat around the table and we've compromised. Now some suggested that maybe centralized collections was a solution, but in respect to our business or our city partners, we've never even really entertained that part or that suggestion. Instead, we've worked on compromising the definitions to come up with something that we feel is a fair compromise.
What are some of the highlights of the bill? If you were to explain it to a constituent in a few sentences, what would be some of the highlights of this legislation?
Few sentences, huh?
As many as you need.
The bill extends the occasional entry rule from 12 days to 20 days. Currently, the law says if you're in another community for 12 days or more, then you will have to withhold for that city. So you can imagine all the way back to day one. So you can imagine how hard that is to, to go all the way back to day one. Our bill says it begins on the 21st day. Now, this doesn't create a tax holiday. Each business will still have to withhold for their businesses in the city where the business is located or where the employee resides. So it doesn't create a tax holidays. It's just going to simplify the process for them. It also creates uniformity for what's called net operating loss carry forward, which allows a business to offset future profits for current loss. So if you have a loss, you can offset some of next year's profit with it. Currently, the federal government does a 20-year loss carry forward. The state of Ohio does a 20-year loss carry forward. Most cities in the state, 2/3 of them, have some sort of net operating loss carry forward. This would, the most common used in Ohio is 5 years. And it was also the mean, so that was a compromise. We used 5 years. All cities will have a 5-year net operating loss carry forward. It also will treat pass-through entities fairly. We're going to treat them all the same. You can either tax at the entity level or you can tax at the owner's level. What the cities told us would be the fairest would be to tax at the individual level, but collect at the entity level, so that everybody will be doing it the same way. It also provides for uniform filings, due dates, penalties, interest, things like that. And finally, it will eliminate what's called a throwback rule, which unfairly taxes business, really the customers of the business, who, when they sell to a business in another community that doesn't have income tax. So those are some of the highlights of the bill.
Can you explain what a pass-through entity is?
Sure, yeah. A pass-through entity is something like an S corporation, limited liability corporation, or a partnership where it's a separate entity, but it's taxed as an individual.
I understand you introduced similar legislation in the previous General Assembly. I believe it was House Bill 601. Is this the same exact bill, or are there some changes?
No, there was some language we needed that caused some confusion, that really a lot of misinterpretation that people thought was really going to create some huge burdens for them. So we kind of cleaned up that language. There was a couple unintended consequences to some of the language, so we corrected those, and we've introduced a cleaner, more effective bill, I believe.
Okay, thank you, Representative, for sitting down with us today. If you'd like to learn more about this issue, feel free to contact Representative Henne's office. Details are located at the bottom of the screen. For the Ohio House of Representatives, I'm Brad Miller. Thanks for joining us.